blow. Ain't no told you so's. I'm a big ghost. I'm a big ghost. We hold the gold. I be super bullish like the bearable bull. My lifeboat full, ready for the big boom. Astronaut suit headed.
Rise and shine, bullish time. Good morning, good morning. I hope all is well. Guys, we got a hell of a show today. First thing first, I want to give a huge shout out to XRP Bags. I will link this video in the description. I highly recommend it.
Don't flex, but I had to go all out. You said it couldn't happen, now we floating through the clouds. You see us popping off, you be like, holy cow. I missed the showdown, ain't no getting in now. Shooting past the moon plow.
Okay, guys, like I said, I will link this in the description. I basically want to, give a huge shout out to XRP Bags. I highly recommend this rocket music for the gym. Okay, guys, I'm not a financial advisor. I'm documenting my journey on the internets of value. U.S. banking regulators about to ease restriction created in the aftermath of the recession. Guys, it's finally here. Phase 1 of the Executive Order 13772. The White House rolls back regulation. Executive Order. I'm going to show you guys how. Billions and billions of dollars will be freed up. Banks can now invest in startups. White House rolls back regulation. Very good article here, guys. And like I said, this is phase 1 of the Phoenix. Also, all cryptos float. Joe Katz came out a week ago and said the tribalism is hindering the growth of the internet of value. So I had a second look at XLM, and guys, you're going to be surprised. Rabbit hole time on XLM. The rabbit hole runs deep. Coinbase backs XLM in a big way. I'm going to show you guys how. So let's get this party started. Smash some thumbs up. Hit that subscribe. I am not a financial advisor. I'm just documenting my journey on the internet of value. Former U.S. Treasury head calls payment friction the best argument for crypto. Former U.S. Treasury head calls payment friction the best argument for crypto. In June 25th, with Circle Jeremy Lore. Now, this is really big right here, guys. We're going to talk about this in a moment. Also, I got huge hidden gem news also. Circle Jeremy Lore, Treasury Secretary Lawrence H. Summers. So that name jumped out at me right away. Former Treasury Secretary Lawrence H. Summers talked about crypto ability to patch up the modern financial system, particularly calling out great difficulty in the process of global payments. So, first thing first, guys, is the name Lawrence Summers jumped out at me, and I recall this one. This is Digital Currency Group. Banks can't ignore Bitcoin anymore. Digital Currency Group. Banks can't ignore digital assets anymore. Now, here's Barry Silbert, guys. He's the CEO of Digital Currency Group, one of the biggest investors in crypto, earliest investor in Ripple Labs. Now, board members right here. You got Barry Silbert, Glenn Hutchins, and board advisor right here. Who do we have? Lawrence H. Summers. Lawrence H. Summers right here. Former Treasury Secretary Lawrence H. Summers talked about crypto, the ability to patch up the modern financial system. Now, Summers dismissed arguments of common in crypto about monetary collapse brought about quantitative easing. Now, however, Summers pointed out an example of trying to send money to his son while studying abroad, or $3 fees at ATMs are a clear example of speed bumps into the global system. Now, currently, Summers is a professor at Harvard. Now, I was going to pull it up also, guys. You guys recall where Harvard invested $300 million into the Digital Currency Group. Why would they do that? They have the professor at Harvard. He's former Treasury Secretary. He's friends with Jeremy Lore, and he's also on the board of the Digital Currency Group. Of course, Harvard would invest into this new asset class. So major breadcrumb rabbit hole right there. Former U.S. Treasury head calls for payment friction, and he's also talking with Jeremy Lore. So that's a pretty big deal right there. Okay, guys, speaking of Jeremy Lore is actually responsible for the USDC. Now, I did highlight this a little bit, guys, but I think people are underestimating the power of this relationship right here. I think this is a very big deal, and I'm going to show you guys how. Algorand, ALGO, which is staking and baking on Binance US, a regulated US exchange. USDC stablecoin to launch on Algorand's blockchain. Wow. USDC stablecoin will launch on ALGO in debut of its multi-chain framework. This dollar-backed digital asset gained popularity in recent months to become the second largest stablecoin. An integration with Algorand will further scale its prospects, given the underlying value of fiat conversion to stable tokens, conversions to stable tokens. As the demand for stable increases, USDC, which is an ERC20 token, which I didn't pull it up, but you guys know that the USDC just left Ethereum and is launching on Algorand blockchain also. Seems to be implementing a scalable solution for integration. The Circle and Coinbase Run Venture. Now, so this is Circle and Coinbase. Run Venture is optimistic about mainstream adoption. Now, USDC powered stablecoin on Algorand. Now, this is why this is very significant. If you guys recall, about a week ago, I uncovered that Algorand is represented by the biggest lobbyist firm in Washington, D.C. And I uncovered that by searching the lobbyist firm because they represent Coinbase. Now, Coinbase is responsible for the USDC with Jeremy Allure from Circle. So Coinbase is represented by Franklin, the lobbyist group in DC. And now we have a partnership with Algorand and Coinbase. Clearly, I believe the lobbyists are behind this and saying, hey, you might as well partner with representing Algorand, representing Coinbase. It'll be much easier to fight for you guys in DC with regulators if we say, hey, Coinbase and Algorand are working together. So basically, bam, the partnership steps in. USDC power stablecoin on Algorand. A highlighted earlier, the USDC power framework will launch on Algorand before scaling to other platforms. Circle noted it's the goal to add support of USDC and other stablecoins with Algorand's blockchain ecosystem. So that's really huge right there. The combination of USDC and Circle platform service with the Algorand blockchain will create a foundation for developing a wide range of scalable, secure, compliant financial applications. Whoa. So guys, I'm telling you, keep your eye on Algorand. Right now it's 23 cents on Binance US. I'm not a financial advisor. There's only a total supply of 3.3 billion. I'm thinking, I don't even want to put a value on what this token I believe is going to be. So guys, it's a very big deal right there, that's for sure. Definitely take a look at Algorand. Okay guys, rabbit hole time on Stellar. Ever since Joe Katz came out and said that animosity or tribalism is hindering the growth of digital assets, I'm calling for a Jed McCaleb, Dave Schwartz reunion. Built on Stellar, which is, I'm going to tie to Coinbase right now. Built on Stellar. Built on Stellar. Stellar is an open financial infrastructure case study. See how businesses use Stellar, IBM right there. Explore the ecosystem. So this is the Stellar ecosystem. Now, in the Stellar ecosystem, I just wanted to go through here and see if I can pull out some big partnerships. And the first one I actually dissect was Anchorage. Anchorage. I do recall Anchorage big time. Now, so I said, let me Google Anchorage. Now, this is the Stellar ecosystem. Here's Anchorage right here, raising the bar on digital asset finance. Now, crypto custody made usable. So this is a crypto custody provider trusted by leading funds. So this is the partners of Anchorage, which is in the Stellar ecosystem. The first one jumped out at me was Andreessen and Horowitz. Andreessen and Horowitz is the very first Ripple investor, and they're invested in multiple blockchain and digital asset companies. The next two are Blockchain Capital and, of course, Paradigm right here. Paradigm and Polychain. Paradigm and Polychain are both Coinbase Mafia projects. This is Fred Urserman, and this is his co-worker, former Coinbase employees that started these funds right here. The Crypto Rich find security in Anchorage. 57 million funded cryptocurrency startup. When someone wants to keep safe tens and hundreds of millions of dollars in crypto, they put them in Anchorage Vault. You can now trade straight from custody with backing from Visa and Andreessen Horowitz. And actually, let me take one step back. I think they show the ecosystem here. Yeah, they sure do. Of course, you got Stellar right here. You got XRP right here. You got the USD coin, which is launched on Algorand, of course. And you got a couple other tokens in here too. Paxos, stablecoin, OMG, Stellar, 0x, Coinbase Mafia coin, Tezos. Huge. Tezos. I can't say enough about that one. So you see the ecosystem for Anchorage right here. Here's Anchorage's Twitter page right there. I pulled that up. I will link us in the description. I just like to do a little bit of research on the project as I uncover it. Now here's Paradigm right here. Here's Paradigm, and here's Paradigm right here. So Paradigm and Paradigm, I'm about to show you guys right here. Coinbase Paradigm invests $15 million in startup. Coinbase Paradigm, because they're both Coinbase Mafia projects. Crypto heavyweights: Coinbase, Polychain, and Paradigm. Coinbase, Polychain, and Paradigm. And what do we got? Paradigm, Polychain, and of course Coinbase. So right there you see, guys. And the reason they're calling them crypto heavyweights is because this is the Coinbase Mafia. Now top U.S. investors, including Panera Capital, Paradigm, and Polychain, Coinbase, are lunging at opportunities. Fred Urserman, co-founder of Paradigm. Now here's Fred Urserman right here. Fred Urserman, occupation co-founder of Paradigm and co-founder of Coinbase. So pretty much Paradise is in the VeChain XLM ecosystem, and this is Fred Urserman, Coinbase. And Paradigm, Coinbase Insights right there. Coinbase, so Paradigm, Coinbase Insights. Paradigm is a fund of Sequoia Capital. Partner Matt Hung and Fred Urserman, co-founder of Coinbase right there. Paradigm Twitter, Fred Urserman. Paradigm Crunchbase. So we move on right here. Here's Fred Urserman right here. This is his Twitter. I will link all this in the description too. Previously co-founder at Coinbase. So that kind of shows you guys the ecosystem is not that big when it comes to the Stellar ecosystem, but a lot of the big players are involved in the Stellar Lumens XLM ecosystem. So pretty much, guys, it's on Binance US, 7 cents a token. I'm not a financial advisor, but I'd rather be safe than sorry. So the moment you guys have been waiting for. Executive order phase 1, the Phoenix, has been implemented. Bank stocks reverse higher as regulators ease Volcker rule. Banks can now invest in startups. It's almost time for monsoon. So I actually want to read this a couple lines out here to you to show you guys what I mean. But actually, first thing first, guys, is I did pull up this right here, G-Man. And G-Man shared this right here. No one can stop the train. Here's Greg Phillips right here. Greg Phillips, board of director at Ripple. And, of course, he's good friends with Steve Mnuchin. Here's Greg Phillips and Steve Mnuchin right here. And as we take a look at the executive order, a financial system that creates economic opportunities. This is signed by Donald Trump, President Trump, U.S. Department of Treasury, first 100 days in office. A financial system that creates economic opportunities for non-bank financial fintech and innovation. Report to President Trump, Executive Order 13772. And there's Steve Mnuchin, and there's Greg Phillips. And there's G-Man, there's Steve Phillips and Greg Mnuchin. I mean, let me slow down. There's Steve Mnuchin and Greg Phillips that are responsible for the executive order. Now, staff acknowledgments, Secretary Mnuchin and Counselor Phillips would like to thank the Treasury. And of course, guys, there's so many breadcrumbs in here. Non-bank financial fintech and innovation, embracing digitization, data, aligning the regulatory framework to promote innovation, enabling policy. Now, if you go to the first, I'll show you guys. President Trump established a policy in his administration to regulate the U.S. financial system in a manner consistent with core principles. These principles were set forth in Executive Order 13772 in 2017. The U.S. Department of Treasury, under the direction of Steve Mnuchin, prepared this report in response to the executive order. Now, the scope of this report: non-bank and financial fintech and innovation. Non-bank financial firms play important roles in providing financial services to U.S. consumers and businesses by providing credit to the economy across a wide range of retail and commercial asset classes. Non-banks are well integrated into the U.S. payment system and play a key role, such as facilitating back-end check processing, enabling card and issuing processing, and network activity. Now, non-bank financial firms also play an important role in capital markets. The financial crisis altered the environment in which banks and non-banks compete to provide financial services. Many traditional financial companies, such as banks and insurance companies, experienced significant distress during the epidemic. And I'm actually going to pull up this article really, really quick too, because I want you to see this article. The landscape, I'm going to pull up one article real quick, guys. The landscape for financial services has changed substantially from 2010 to the third quarter of 2017. Now, if I pull up this article, okay, I got it. From 2010 to the third quarter of 2017, more than 3,000 new technology-based firms servicing the financial service industry have been founded, 40% of which are focused on banking and capital markets. Now, this is the article right here and this is why I say this is phase one of the Phoenix, because to roll back the Volcker rule, this is what they talk about in the executive order. Now, banks stock surge after regulators ease Volcker rule. JP Morgan Chase climbs 2%. U.S. banking regulators are about to ease the restriction created in the aftermath of the Great Recession, a development that sent back bank stocks surging. FDI officials say they are loosening the restrictions from the Volcker rule, allowing banks to move money more easily and make large investments into venture capital. The company was also able to The companies will also be able to avoid setting aside cash for trades between different affiliates of the same firm. Whoa. So that's different affiliates and the same firm. So if you're affiliated with this firm, you will no longer have to hold dormant capital within the institution. And that's what Brad Growinghouse has been speaking about forever, freeing up dormant capital. That could free up billions of dollars for the industry. U.S. banking regulators are about to see an ease in restriction. Now, the banks will also be able to avoid setting aside cash. Shares of JP Morgan, Goldman Sachs, and Wells and Fargo and Morgan Stanley were all trading 2% higher. The move is in line with the broad push by the White House to roll back regulations put in place by the previous administration. While the banking industry has acknowledged the benefits of being required to hold more capital to cushion losses, lobbying groups, now I just spoke about lobbying groups, guys. We've been talking about lobbyists a lot lately. We tied Coinbase and Algorand to the same lobbying firm, and now we have a USD Coinbase Algorand partnership. I don't think that's coincidence. The largest lobbyist groups and individuals, including JP Morgan CEO Jamie Dimon, have criticized parts of the post-financial regulatory regime as being overly restrictive and redundant. The Volcker rule is part of the 2010 Dodd-Frank Act, which passed an attempt to prevent another financial collapse, caused in part by irresponsible risk-taking at banks. The Volcker rule was designed to prevent banks from acting like hedge funds. The general principle is they are allowed to facilitate trades for clients, but not allowed to strap on risk for big property bets. But the rule has changed. Also, they were barred from making investments using customers' money. This included venture capital funds. Now, the change was floated earlier this year, would allow banks to invest more of their own capital and venture capital funds into startups. So startups is a fintech and small businesses alongside clients. So pretty much phase one of the Phoenix has been rolled out. Phase one of the executive order has been rolled out, giving banks more opportunity where they don't have to hold dormant capital because they have a new tool in the U.S. Treasury toolbox, and that's called the standard. I truly believe the rolling out executive order 13772 XRP will be the standard for the new financial system as far as the basement, the groundwork, the bridge asset for the globe and the U.S. What do you guys think? Let me know below. That's for sure. Also, guys, I want to give a huge shout out to XRP Bags and Shaco Doggo Riddler on the same track, Zero Doubt. They have a premiere official dropping, premiere 6/27 in 2 days. I believe it's Saturday. They're going to have a premiere. I will link this in the description, guys, if you guys can subscribe to XRP Bags, and we can all attend this premiere Saturday. So that'll be huge. Alrighty, guys. So let me know what you guys think. All boats float. Tribalism ends today. Do you see the relationship with Coinbase and XLM? Do you hold XLM? Also, phase one, Phoenix. The bullish bull will come down right now. Smash that bull, subscribe to the channel, hit that thumbs up, hit that notification bell. You'll be notified when we release a video daily. Much love, mahalo. The digital decade is here.